Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Tech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. And obviously this week we're still looking at Greece, we're still looking at the Fed monetary policy. These are the two key events, certainly that are the big drivers. And over the weekend we had the latest breakdown of the meeting for Greece. The negotiations still haven't got anywhere, there's still no deal. And the parties seem to be getting increasingly fractious. The comments from Greek Prime Minister Tsipras certainly suggesting that the creditors need to sort of get realistic in terms of their demands, and also German Finance Minister Schäuble is just talking about the increasing need for a deal and Greece moving ever closer to potential default. So it's coming to a head at some stage this month. We've got the next potential meeting on Thursday with the Eurogroup, and that could be when we'll get more news. But certainly at the moment on Monday, the Greek situation is still impacting. Could go on until the middle of the week, but then the focus turns to the FOMC, the big meeting that we're going to have, whereby we're not only going to get the monetary policy decision, we're also going to get a press conference from Janet Yellen, and also we're going to get the economic forecasts. Now, the data for the States has been improving recently. We've had in recent weeks improvements in ISM manufacturing, in non-farm payrolls, in the average hourly earnings, and also such other indicators such as retail sales and also the Michigan sentiment. So there is potential for, I suppose, those economic projections to be improved, and that could well usher some questions for Janet Yellen, and there's no real expectation of a rate hike in June now, but certainly the market is beginning to think maybe potentially September or even December now. So it certainly looks as though that whatever Janet Yellen says in her press conference could have an impact on the dollar. Now, Treasury yields have been falling in recent days as investors are buying bonds again. However, that could turn around if we start to see a more hawkish Fed, and that could certainly help to support the dollar. So, in terms of Forex markets, what are we looking at? Well, we've got euro-dollar. That is beginning to fall away again. It's basically trading in a sideways band below that key resistance at 114.60, but still above this big pivot level at 110.65 area. So it continues to trade above that. So it's a very slight near-term positive sentiment, but still I think it's fairly choppy and range-bound, and still very volatile as well on the euro. Cable is slightly more positive in terms of the technical outlook anyway. It continues to push higher, in fact, although it has had a bit of a dip on Monday morning. It'll be interesting to see what happens now, because the technical indicators are suggesting perhaps a little bit of fatigue in this run higher. And there's a lot of UK economic data out this week that could cause a lot of volatility in this one. So this is certainly going to be one to watch this week on cable. And in terms of dollar yen, we've had this run higher that got corrected last week after those comments from BOJ Governor Kuruda, and the market's still trying to settle down. It's still in looking like it's trading in a bit of a range at the moment, in a resistance band 123.50 to 124, but I still think that there's room for further correction, further consolidation back down towards that 122 breakout level, which I think would probably be a bit of an opportunity to buy. Now, in terms of the equity markets, well, we've been looking at certainly the Greece factor being a big influence on the DAX. That volatility that we're seeing on the DAX continued on Monday, and we've got the DAX once again sharply lower. And the outlook for the DAX certainly doesn't look good technically either. A series of lower highs, consistently falling over at lower levels, and the momentum is increasingly negative as well. It certainly looks as though it's going to be testing that key low from last week again at 10,865. For the S&P 500, again, we haven't got any earnings to drive it, so it's looking more international, and it's looking towards Greece as a big mover on sentiment as well. So it's not really being able to gain any traction to the upside. It is falling over once again, and it looks like it's sort of once again sort of trading in a bit of a sideways range, but needs to hold on to that 2068 support that it's been using as that May low. Interesting that FTSE's already broken that May low, and it's now looking as though it's increasingly possibly going to have a test of that 6,695 key low, and that could come in as that big support. And if it's broken, there could be significant further downside. So FTSE is one to watch at the moment. For the gold price, we're looking out for Again, my belief is the technical outlook has now broken down. We saw a breakdown of that range 1178 to 1224 a couple of weeks ago. Had a rally last week, but that rally's fallen over again. Momentum indicators are suggesting rallies are a chance to sell. And again, on Monday morning, the price is back below that 1178 level. And certainly if it closes below that again, I think that would usher in further downside, a test of that 1162 low that we saw from last week, and potentially even further downside in due course. So gold remains under pressure, and certainly if the Fed goes hawkish, then that would put more pressure to the downside on gold. So for the rest of this week, we've got the economic updates, and there's quite a lot of data actually to get through, a lot of key tier 1 economic data that we have driving these markets. Starting on Monday, we've got the US industrial production numbers. Certainly markets will be looking out for that, because the industrial production in the States has continued to deteriorate, and it needs to start picking up, you'd think, for the Fed to get a little bit more interested in hiking rates. On to Tuesday, we start off with a lot of central bank data for the week, and we've got the RBA minutes on Tuesday, but then we go into the UK with the inflation data, that big inflation data that could have the first of several impacts on cable. Then also that morning we've also got the German ZEW expectations as well. On Wednesday we've got the double whammy of UK employment along with the Bank of England meeting minutes. Now the meeting minutes of the Bank of England are increasingly interesting, because we're getting a few hawkish comments coming out of the Bank of England governor, the Bank of England members, and we might start to see in maybe not this month, but begin to see hints of potential movers on those rate decisions. Also, in terms of UK unemployment, we're looking out for the average weekly earnings picking up once again. Then on to Wednesday evening, we've got the big one, the FOMC gives its economic projections and also monetary policy, along with Janet Yellen's press conference. So big volatility Wednesday evening. Thursday we've got the SNB, but also US inflation. Now last month we saw core US inflation, core CPI picking up, and that was the first real sign that we thought that potentially the figures for the States were beginning to turn around. So it'll be interesting to see if that continues this week. And then on to Friday, we've got the Bank of Japan monetary policy. So lots of central bank data to drive these markets. Lots of volatility, I think, again this week. Looking out for Greece and the FOMC predominantly, but still lots other than that as well. So I wish you good luck in your trading, and I'll speak to you again next week. Thank you.